Good morning, guys. It's Chris from DaxTrader.co.uk. It is Friday, the 3rd of November. And this is the Dax Technical Analysis wrap up. If the sound on the video is not that great today, it's because I'm using a different microphone, so you'll just have to persevere for now. All right, let's get started. Trading financial markets is risky, involves the risk of losing our invested money. The webinars and videos are provided for educational purposes only. No investment advice is provided. If you decide to enter a trade on the back of any of these webinars, then please do so entirely at your own risk. Okay, cancel that. So yesterday we had an inside day. Pretty much the majority of the trading range was inside the value area of Wednesday. POC we've got here at 13,441, 437 for the value area low, 455 for the value area high. We've already poked above that today. We've created the IB, which we're still trading within. We've got like a mini double distribution day going on here at the moment, holding currently above the point of control of Wednesday. The point of control is generally the highest value zone for that day. It falls within the value area. That's defined generally by a normal distribution curve of where 68% of trading happens. And that's what the grey shaded area on this TPO chart will show you. All right, on the daily chart, still the key thing really here is that we've got this bullish fork still in play. It's textbook at the moment. The reaction from this C point here of the fork has worked its way through these zones into the highest zone, zone 4. We zoomed through quartile 1. We zoomed through the median line. We switched back and tested the median line. We're now zoomed through Q3. And we're looking probably heading up towards 14,000. That's what it wants to do. Follows the textbook. But we need time. Excuse me. We need time to catch up with price because we really have rocketed the best part of 600 points or so from the previous trend defining low, without any kind of pullback. It's a common idea. Now, as far as intraday trading goes, you can use a balance point kind of tool, which is just basically a Fibonacci retracement tool with a 50% line. And you pull the start of it from the very low, and then you draw your 50% line somewhere in between what you consider a balance point. In this case, is the 50% line, which I'm looking at this bit down here. Watch that line. You know, it would be somewhere either there or there, depending on how aggressive or conservative you want to be. That gives you your extension line up here. That's where price is looking ahead. Now we're forming a doji at the moment. Could that actually be a star? Keep an eye on that, because really what we want to see is a bit of a pullback in this market, and that might indicate that that's going to happen. If it does, we want to kind of see something like that. And so on and so on. Lovely drawings, I'm sure you'll agree. That sort of idea. That would be healthy. But we'll see. We'll see whether that happens or not. Okay, I'll leave that for there. I'll tidy that up in a minute. The initial balance for today, we're still trading within that. Yesterday we broke below the IB, but we actually closed within it and almost popped out the top at the end. So that would attract quite a few people in. Really, I'm kind of flat at the moment, only because most of my trades were closed out at a decent profit on Wednesday. I did try a trade yesterday, but got stopped out, and it went in the direction I originally traded in after it stopped me out. It's one of those things. And the idea that I'm playing with at the moment is that, which is pretty busy, you can see, but it's just an ACR line set here, action, center, reaction, which is what we look at from Alan Andrews' work. We've got a VWAP line here with the deviation high and the deviation low. We've got a horizontal line here marking out the low, the previous low. And we've got a fork pulled very loosely from this ABC here. And, it is very loose. I can tighten that up maybe a little bit. But anyway, it's providing us with a sort of a rough indication of where price will be looking to head to if it touches the median line, which it often will do. A median line touch is also a reaction line touch on that ACR line set. It also comes in line with the deviation low and the previous low as well. So that is a bit of a hotspot zone right there, which it looks very interesting to me. And if we were going to be looking to go long, then you'd want to be parking your stop loss under some previous structure. So I won't give you all the answers, but that's kind of what I'm looking at. And depending on how aggressive you'd want to be, you'd be targeting a break of a new all-time high, risking a very, very small amount, maybe 0.5% or something like that. Okay, so that's kind of an idea that I'm looking at. As far as short-term trading would also go, if you wanted to short the market, then there's another idea based on a simple bearish fork pulled from those levels ABC. You'd be shorting from a test of the upper median line parallel here. Let's just get rid of this one. Test of the upper median line parallel. Stop above the highs. And look to target the median line. Gives you a 4-to-1 look. And the wider look would be to get a retracement back to close this gap, test this previous consolidation zone and get along from there is what I'm interested in personally myself. But we'll see what happens. So that kind of summarizes everything, guys. So have a great trading day. Have a great weekend. We'll be back again on Monday, and we'll catch up then. Take care.